This year has been phenomenal for SPX6900. The token was the top performer across the 100 largest cryptocurrencies, and this week we are up yet again. The question is, how much longer can this rally last? What's the potential price target? Let's have a look at the on-chain data most people are not considering. So everybody that got into SPX6900 a year ago made more than a 50x. That's even better than virtual protocol. This week, again, it's the top performer plus 31%. And with all of that price appreciation, the token is now the third largest trending token on the Ethereum chain. It's got a liquidity of 14.4 million. The only tokens that are larger is Mockcoin and Pepe. Now, I'm covering SPX regularly on this channel, and the very first video was published 240 days ago. And the video just performed like any average video. So the average video is in gray, and that particular video is here in blue. That was when the price was still a bit under 11 cents, or in other words, over here on this chart. Subsequently, the price went up by more than 1,300%. But as it always goes with meme coins, there's a lot of volatility, top to bottom, a drop of more than 80%. And now we are recovering. Now the token initially launched on the Ethereum chain, but now we've got two more versions. We've got one on Base and we've got one on Solana. And we are going to analyze all of those tokens. Now here's the Ethereum chain. We've got almost 40,000 holders there. On the Solana chain, we've got more than 51,000 holders. And on the Base chain, we've got more than 76,000 holders. So it appears as if Base is the most important chain, followed by Solana, followed by Ethereum. But it's actually not that easy. Have a look at the number of retail investors versus whale investors. Now this is the data on Ethereum. To be counted for the chart on the left, a wallet has to hold at least 1,000 tokens. So that's a bit under $1,000 worth of the token. In the middle, it's 10,000 tokens. On the right, it's 100,000 tokens. We see how small retail tends to just buy and hold, but the whales, they sometimes do take profit. So the number of whales went from 865 to 700 in the span of 6 months, roughly. The number of retail investors didn't really change. And that then explains those movements to the downside, right? It's the smart money. It's the big guys that take profit. Small retail on average does not take profit. Now here are the same numbers on the Solana chain. Again, a similar behavior. The whales take profit. Small retail doesn't. And just compare the number of those whales, right? This is 100,000 tokens. There are now 700 such wallets on Ethereum and only 170 such wallets on Solana, despite the total number of wallets on Solana being higher than on Ethereum. In other words, Ethereum is for the big money, Solana is for the small retail investor. Here is the Base chain. The selling trend is not as clear for the whales here, but again, retail isn't necessarily buying recently. Now, aren't those charts somewhat surprising? The whales take profit, small retail isn't buying, yet the token was the top performer in the last week. What on earth is going on? Maybe it is leverage. Maybe it's the perpetual futures. Because most trading volume on the spot market now happens on centralized exchanges, and there's also perpetual trading volume, which is larger than the spot volume, again on centralized exchanges. Yes, the open interest on the perps tend to rise, and yes, it is somewhat correlated with the spot price. So this went from 16 million of open interest all the way to 50 million. So there's now much more bets on the price, but those bets aren't necessarily skewed in any direction. Most of the time it's slightly positive, so people tend to just bet on rising prices. And whenever there is an overhang of shorts, it's not that strong of an overhang that it's worth for the market makers to do a short squeeze. So the price just ripples down. The number of liquidations is also nowhere near the old heights. And so it appears as if this market is somewhat balanced. Maybe a few market makers accumulate the token, but it's not like the number of whales is going up. It's also not like a lot of leverage, short-term leverage is now entering the market that pushes everything up. Check this out. This is the SPX chart relative to Bitcoin over time. We seem to be somewhat in a trading range, and from the bottom to the top, we've got an outperformance of roughly 200%. And we are neither very cheap nor very expensive right now. Potentially, currently the momentum is bullish, because we went from the bottom, now creeping up. But of course, one might also interpret the recent trading range a bit tighter. and then we might be at the upper end. Now, fundamentally, the problem is that returns are very much concentrated in a few assets. Most assets tend to go down, and there are a few altcoins that make the multiple X returns. And the problem is those assets change over time. What worked well yesterday might not work tomorrow. And so it's always a game against the odds. And so we can't really deploy a lot of capital in those trades. If the likelihood of losing is very high, it means we can't deploy too much in the position. It also means we can't necessarily diversify, because if we now own 10 or 20 tokens, most of those tokens are losing. And if then the few outliers make up for all the losses is a completely different question. It's very unclear. Now, there is a way to make money a bit more consistently, and that's actually trading the larger tokens. The issue with the larger tokens, though, is that they move very much in tandem with the overall market. As in, when Bitcoin goes up, then Solana tends to go up as well, Ethereum tends to go up as well. But there are movements within crypto where sometimes a particular asset class is more preferred than another one. And we can play on that relative valuation. We can play on attention moving from A to B within crypto without having to try to find the few winners. For example, have a look at this. This is the Solana dominance. So how much of all of crypto is currently in SOL? And there seems to be somewhat of an invisible ceiling between 3 to 4%. This is where Solana historically had been very expensive. Or have a look at this. This is the Ethereum dominance. It tends to be very cheap when only 7% of all of cryptocurrency's market cap is in ETH. It tends to be expensive when it's around 20 or 21%. And so we can benefit from this independent of where the US dollar valuations go. So if Bitcoin is going up or down does not interest us. The only thing that interests us is whether or not Ethereum will perform better than Solana, or Solana will perform better than Ethereum, just relatively speaking. So I saw that set up when Ethereum was extremely cheap in the middle of April. We got very close to the historical low that was formed in September of 2019. And so have a look at this. This is Solana relative to Ethereum. And when ETH hit that low point, I shorted Solana relative to ETH. So I was not interested at all in the Solana US dollar price or in the Ethereum US dollar price. I was only interested in the relative valuation. I saw we are high on the trading range, and I bet on that range coming down. So here's that post. It's from April 13th. I'm opening a relative valuation short of SOL to Ethereum using Venus Finance. More information will be provided in a few hours in today's premium update video. So I publish premium updates every 3 to 4 days. And then on May 20th, I closed the position. And of course, other members made money with this as well. But I want to share something here. This is when the position was opened. Here is when the position was closed. And I want you to look at the Solana value. Again, we bet on Solana doing worse than Ethereum. Solana itself actually went up during the time. It appreciated by 25%, but Ethereum appreciated more than that. It went up by more than 50%. And so we completely canceled out the macro. We are not interested at all whether or not everything is going up or down on a given day. We made money just on the relative valuation. So within those few weeks, we went from 43K to almost 60K. Yes, I know these kind of strategies might seem a bit complex, and why don't we just buy an altcoin and make it 10x? But again, it's all about risk-adjusted returns. If we want to bet significant capital, tens of thousands of dollars, or let's say relative to your net worth, high percentages. We don't just want to play with play money, but we actually want to make real gains. We need to use strategies that don't have an 80 or 90% chance of failure. I see people making these mistakes all the time. I even see people making mistakes with their risk off position. So let's say they don't want to be exposed to crypto, they just want to be in stable coins, that those stable coins just stay laying in the wallet. But there are opportunities to make very nice constant returns even with stable coins. So this is 16% APR. This can be achieved on Hyperliquid without a single trade. This is all just automated arbitrage by the market maker. But of course, I've also got my risk on part of the portfolio. And here's something other people don't show. Most people just show individual trades and say, hey, this is how we always make money. Very few people are actually willing to share their overall portfolio performance. Now, I started trading on Hyperliquid on April 22nd, and here is my P&L over time. And since I'm sharing all of my trades, the members can just copy me. And this is actually very nice feedback. The same kind of portfolio development chart. This chart tells a story, first trying it without any support, and then afterwards where this green arrow is shown, exclusively following Gerhard's trade and slowly digging out of the hole. If you've got the right risk management in place, there's actually a lot of money to be made in this market still. But actually, I don't want that everybody is just copy trading me. The community is about elevating our skills. It's about learning as much as possible, helping each other, finding market opportunities, and then of course capitalizing on those opportunities. So I've actually made more than 100 tutorial videos just on various topics within crypto, risk management, portfolio valuation, blockchain analysis. Feel free to binge watch this. It's actually nice to get those DMs. Hey Gerhard, I just wanted to thanks a lot for everything you've done. Since I've only been listening to you, I've been consistently profitable now. I just entered your, I've blacked this out, XYZ position as well. Or here, this is also another nice message. I'm not going to read through all of this. Feel free to stop the video. But yeah, if you want to join us, if you want to copy trade me, if you want to learn more about crypto, feel free to check it out. It's currently $125 per month. The price has actually been lowered because now the attention on crypto is much lower than it used to be a few months back. Once the masses come back in again, then the price will be back to $165. So if you're signing up today, you will never pay a higher price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!